Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. On today's episode,
based from my experience, the biggest losses that I had, whether actual losses or opportunity losses, was when I was sure that markets are gonna go up or down, right? When you're not sure, you tend to always be on the lookout every single day, always question whether you're right or wrong. Maybe you're underinvested, maybe you're overinvested, and that's very healthy for me. But when it comes to a point wherein everything that you see is just confirmation bias, based on my experience, that's where I really lose a lot.
call it what you want, a game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
Ladies and gentlemen, welcome to episode number 35. 2 weeks ago, we were very happy and very excited at the Trader Summit. 2 weeks later, markets have dropped tremendously, and that's why we're here. But in a positive note, and I have here today Leonard and Charles, who were also with me during Trader Summit. Guys, please say hi.
Hello.
Hi,
guys.
everyone.
Come on, you gotta be more excited than that.
As excited as the markets are today.
So the reason why we're back and we've been gone for a long time, it's because we've been exceptionally busy preparing for August. So if you guys are available in Singapore, please join us. We'll be there for 2 days on August 24 and August 25. But we'll talk about in a next podcast, in a future podcast. Let's focus on what's more important today, which is the markets. This year has been difficult, primarily, especially for the investors, I assume. For the traders, maybe also difficult, right? But if you extend this not just from this year to last year, 3 years from now, 5 years from now, we're probably at May 2013 levels again at 7,400, right? So if you invest obviously in the last 6 years, you're still at the same level of index, right? But obviously there's been ups, there's been downs. You had your swings both to the top and going down, right? And most of the time the market has been range bound. Maybe you guys can shed more light as to what's happening and what has changed, and maybe later on we can talk about what do you see going forward.
I guess at the biggest picture, as you said, since May 2013, we've been at these levels, 7,400, 7,700 today. I guess the biggest difference since then was that 6 years ago we were at 22, 23 times PE. And now, 6 years later, still around the same level, we're now down to 16.5 times PE. So I guess what has happened over the last 6 years is that you have a derating of multiples in the local market, at least. And in a way, so in that sense, we're now cheaper than what we were 6 years ago. But you have to match that with the higher interest rates today. So in a way, it's kind of sad also, because even after 6 years of no gains, we're still fairly valued, right? So it just so happened, with the benefit of hindsight, you could have said that in 2013 we were overpriced at 22, 23 times PE, right? So I think that's the bigger picture of things.
So it took 6 years to correct that expensive valuation, the point is.
Yeah, so the duration really happened through time, through 6 years, to correct that 23 times PE to now what we are now.
And the only way to further correct this is as corporate earnings continue to grow, if I'm not mistaken.
Yeah. Earnings should continue to grow. The question is, how fast will it grow? Over the last 5 years, maybe the average is around mid to high single digits in terms of growth. If we're lucky, maybe it can accelerate to double digit, to mid teens that would be good for the markets, obviously. But if not, if it continues to grow by 5%, 8% a year, then that would also be roughly my expectations for returns going forward. Like over the next 2-3 years, on average, it's still gonna be choppy. It's still gonna be on average at 5%, 6% return.
And this is not just isolated case, right? This is like happening all over the world, including emerging markets.
Yeah.
I mean, if you look at Indonesia, India, they all look pretty much
exactly
similar.
because global interest rates in a way are correlated, right? Same with the U.S. rates. So since the 2013 was the start of the tapering, right? The signaling that they would start tapering already, and so that was also the low of global interest rates, and so it in a way it makes sense. No, so when global interest over the last 6 years increased gradually, multiples also decreased. So yeah, it has to be the same global.
What about you, Leonard? Let's say you're taking a viewpoint. I assume you also agree with what Charles said from a US or global standpoint, right? But obviously, we've seen the US stronger than most developed and emerging markets. What would be the main reasons for that?
I think Charles explained the interest rates part. The way I see today, there's also the concerns over China slowing down, affecting the region. Maybe that's where the growth part is being questioned. In the US, the big boost was really coming from the tax cuts in 2017, and a lot of that has been absorbed. So the issue still is that, which everyone I think can read is able to hear today, is that we're in a late cycle already in the market, and when we're in the late cycle, growth tends to slow down. Now the question is, will growth drop significantly with the crisis? And if you read a lot of the more bearish articles, the concerns has always been there, and so it's very hard to preempt it.
That's the thing, Edmund. If you look at the bearish side of the calls, it's not something that's not been said already, especially in the last 2-3 years. Maybe the impact about the trade deal has not been evidenced yet, but we're starting to see cracks today. But if you look at a lot of calls about late stages or everything, there's nothing new under the sun. That's just how I see it also.
There always is a concern that all those debt in the developed markets will just implode, but it's very hard to preempt these things. And the other critic of the US market is the valuations are historically higher. The issue is interest rates are still so low. It's still at 2.5%, and there's just no other opportunities in the market, and those valuations could be justified if interest rates remain there. So my fear is that the US could just also chop around in a sideways manner until there's clarity in the growth globally.
So now, obviously, we're heading to the last stages of the bull market, right? Where global growth is slowing down, as evidenced by manufacturing data, trade data, and this is shown not just in the US but all over the world, especially in Asia and emerging markets. And I think that's the first reason why we're seeing China as the biggest question mark behind all of this, diba? But on the flip side, despite going into this late stages of the economic growth or cycle, whatever, right? Credit is still cheap, right? You have that argument that credit is still cheap, meaning interest rates are still near record lows, 2.4%, whether in the US. And then if you look at emerging market, it's not anything scary. And if you look at the financial system, most of them are still liquid. I don't know where the crisis is going to come from, because there has to be a catalyst for any of these things to appear, right? So usually there's a question of whether it's a slowdown or it's a full-blown crisis. And obviously, to answer whether it's a full-blown crisis is who knows?
Right.
That's just my point.
Exactly.
That's been the last 5 years.
It's been the last 3-4 years naman eh. Everybody's saying there's a crisis, right? Who knows anyway when it's gonna happen? That's just that's my point, right? Despite having that view, how I still look at the markets is that some way, somehow, there's still opportunity. But what's happening is that the opportunity and the swings and the time to make money has just become shorter and shorter and shorter. I think like as investors or traders, you want to have that some level of expectation or base expectations towards the market. So at least when you're preparing or you're trading your individual stocks, it's easy for them to, okay, now I want to buy low, sell high.
Or just stay away.
Or just stay away and not do anything, which is one option, right? Or, I mean,
stock picking.
Stock picking indirectly, diba? And I think that's the reason why growth has always been like the main theme when it comes to stock picking, because that's where really investors, traders are really focused at, diba? The ones that have proven to grow quality year in and year out. And I think it's proven that if you look at the last like 2-3 years of the cycle, especially the ones that are still trading at new highs. So you have your Jollibees, your Ayalalan, you have Wilcon today, right? As opposed to some other stocks that haven't moved or still trading below their 3 years average.
Kasi sa US and Japan, similar, they're better in terms of let's say the US kasi because of those taxes, there was a big boost but still they're all slowing down So the problem is same issue interest rates are so low, there's no reason to derate significantly So nangyayari for me my view is the stock picking is so crucial na you have to be able to select this versus before parang broad based, kahit anong tirahin mo malaking chance tuloy-tuloy.
Yeah, I agree.
So parang ito yung parang when the tide is gone, you get to see who swims naked. Parang ganun. In an easy market, bull run, mura lahat, kahit anong bilhin mo, kaya umakit ngayon. Different na
Stock picking, yeah.
The problem for me, related dito is, alam niyo yung experiment na blue dot? They had this test where you see a lot of dots in the screen and then you'd say which is blue. So pili. So let's say 20% you say it's blue. Now what they tried after that is to run tests where they reduce the blueness of the colors. So less blue na, maybe a bit purple, kumukunti. So nangyayari as a person daw, you change your standards. Parang what you think is blue becomes less blue. So same pa rin sinasabi mong blue sa board kahit kumunti na yung blue versus before. Pero yan yung test. So basically for me, in a tough market, that's a problem. When you can't see any more opportunities, you relax your standard. So even if bulok yung dati, di mo papatulan, ngayon papatulan mo na. That's a problem. That's why it's easy to say don't trade, don't trade, but hahanapin mo yung mga less blue and then bibilin mo That's how I see it. That's why it's so hard in this environment.
I think it's normal naman. Let's say wala ka na mapatulan. Obviously, whatever looks okay, like you lower your standards and then sabi mo okay na yan, pwede na yan, right? And then yun yung papatulan mo. So the question is it wrong? Just curious.
I guess as long as you know the big picture, it's not absolutely wrong. I mean, you just have to be aware of where the bigger picture. So maybe it translates to lower size or being more cautious when you're cutting or being more proactive, right? So you can still do those trades, but you have to be aware of the big picture.
So for me, parang now you need to decide. Jack 10 lang siya. You have to bet smaller, but it doesn't mean that in this market there's no blue. There's still a rare blue dot. It just takes more skill to find that, and if you can find them, you can still size it up as much as you can. So that's how I see it.
Okay. I mean, given all of that, we have like a basic understanding of what happened, especially from a global standpoint, including emerging market, the Philippines. What's important today, like what we said a while ago, is to have a set level of expectations or base expectations for traders, right? And we talked about having like this range bound or buy low, sell high, right? Could you guys give like certain numbers or certain figures, so at least just to guide traders as to what levels they could be picking and what levels could they be selling?
For me, in terms of like calling the tops or bottoms, I tend to use technicals and sentiment more than actual fundamentals. since I believe that fundamentals usually, the prices usually overshoot fundamentals, either on the upside or on the downside. So for me, my base case, the range that I'm looking at least for the Philippines in the next few months, would be range from 6.8, the previous low, until the 8,000 basically. So this is a big box for me.
6.8?
I mean,
Ano ba presyo ngayon?
7.7.
Layo naman.
No, that's for me the worst case.
Okay.
That's for me the worst case.
That's not base case.
Sorry. I mean, I think it's gonna be a big box.
Okay.
Right? I don't see it really breaking out, but I also don't see because I think like with what happened the last 1 or 2 weeks, I've been hearing already talks of new lows. Believe it or not. So my base case would be fundamentally would be like around 15 times, I think, in today's market, and I can bet on it already. But again, technicals, you have to respect it, and it might overshoot. But fundamentally, 15 times looks like a good number to me. But that again is like 10%, diba? 10% from today's price, yan, because now we're doing at 16.5 times. So yeah, that's a 10% range, and yeah, it's really hard to time using fundamentals.
At the same time, even your upside is capped also.
Yeah.
I don't think we're gonna see the 18 above anytime soon also, right?
And as I said, at least for short-term timing, I tend to use more sentiment than fundamental target prices. So in terms of sentiment right now, I would say markets aren't, I don't know if you agree with me, but I think markets aren't really that bearish yet. Whereas if you look at it from a technical perspective, we just broke down the major moving averages. So people are just now starting to lose money, right? By definition. I'm still in a wait-and-see mode on whether that would translate to more bearishness in the coming weeks. If it does, then maybe it would give us a better buying price for companies.
You talked about blue pills a while ago, so meaning there's like certain alpha coming out in the market, and I do believe like we're still seeing some stocks that are stronger than the market, especially just to name some, like your telcos, even some of your small caps, SSI, LR, even Charles's favorites, Cebulan Masters. So I mean, like there's still alpha in the market, but obviously those blue pills, they might not be like what you said, the perfect blue pills. They might be like substandard. Sige na, pwede na yan. At least nag-grow pa sila, diba? And they're cheap, probably. But they're not like the perfect bet, obviously. So as traders, do you focus more on here, or do you focus more on picking bottoms?
For me, that's a good question, and I always like to think you have to know what type of trader you are. If you're more positioned, you don't want to watch the markets, I'd say, as Charles said, you have to wait until things like when things really drop, let's say another 10%, then that's when you get in. That's when you're more opportunistic. But if you're like, you have the time to read and check the markets, I think you need to keep on looking for new stocks that are really growing fast, because they could just appear out of nowhere. And normally, in a bad market, you'll see it clearly because market's weak, and then this stock just keeps on going up with volume, and something must be going on. So for some traders, it even benefits them because the weak market helps you screen out only the strong ones. I mean, there's no right answer. If you want to buy your BDOs, your big caps in the Philippines, you gotta wait.
Wait and see.
Yeah.
Well, at least if you're it's what's important is that you have to know like what type of strategy you want to be doing, what preference you as a trader do you want also.
Yes.
So it ties up to the 45-degree or more 90-degree stocks that you're trying. Because if you're 45, you have to look at all these macros that we're saying that. It's slowing down. You got to be patient. But if you're looking at young growth companies that are just emerging, the market has not seen them before.
Pwede rin.
Maybe this macro concerns are not as big a concern.
But you have to learn how to protect yourself also, because you have to understand that it's still a trade.
Yeah, so the volatilities would probably be higher.
So I personally do a bit of both. I'm lighter than what I was 2 months ago, but I still have some, as you mentioned, some alpha stocks, alpha plays. So I do a bit of both, and yeah, if it capitulates further, then maybe I could look more into the.
You guys mentioned two significant keywords. The first one is you expect volatility to be higher, and your position weighting is also lower. Can you describe what you meant by both?
In general market sentiment, when people are losing money, prices tend to go down faster, right? Because people are cutting losses rather than taking profits. So just by definition, you have to be more careful when it comes to your any position that you're holding. No? Another issue here in the Philippines is that when you're looking for those alpha plays, these are usually the more illiquid stocks. So you also have to take into account liquidity. Sometimes there's nothing wrong with the company, but because the market is the broad market is declining, then you could see a significant sell off in your company. So liquidity is also an issue that magnifies the volatility.
So like in this type of environment, you should expect, because volatility to be bigger, it's largely driven by, like what you said, liquidity, market concerns. And as traders, you should preempt and know that they can happen when they do happen. So at least pag nangyari, hindi sila matatakot.
Yeah. At least you're mentally prepared.
You're mentally prepared.
Yes. And you have to assume, because again, at any point in time, as traders, we have to be aware of our VAR, right? Our maximum loss for the day. Because if you're not aware of that, you're not in control of that, then the ultimate result is that you could be emotional, and that, as we all know, would lead to trouble going forward.
Okay, great.
Can I add there? I think sometimes these are all I think we've experienced them. That's why it's so easy to talk about it. Because one example could be Double Dragon in 2015, during its run up from 8 to 20, and then the whole market was collapsing then. So when it went to 12, 8 to 12, parang okay ka na. Then from 12, it went all the way back to 8 during the certain drop in the market, and then so that's a 50% drop, and then umakyat ulit. So I think sometimes you have to adjust your strategy where you're more nimble and you're able to buy it back when stock prices go back to the pivot point again. So being nimbler in this market and being willing to adjust is a key.
Okay, and going back to my next question, so we addressed this part about expecting higher volatility. The other part is you mentioned about lower sizing. The question is like how much lower?
For me, I have like an overall exposure on what I want, what I want my levels to be.
So you mean overall portfolio?
Overall. So
okay.
So right now I'm about at 40 to 50% in on average, but everything's relative. So like when I'm bullish, I would be around like maybe 70 to 80% in. When I'm most bearish, I'm probably about, I don't know, like 25% in. I'm never really like 100% in or 0% in, because I'm never sure of what the market will do. So yeah, everything's relative. Some people are more aggressive, so maybe they want to do like a 10% in now or 100% in later when it's bullish, or even more than that.
Yeah, it's just a gauge.
So it's a range. So it might be misleading if you just.
I understand. But like an individual position, siguro. You mentioned about VAR, value at risk, and basically value at risk is how much you're being exposed in every given point in time. So a 1% value at risk VAR would entail that position, if you lose up to 1% of your portfolio. On an individual position, do you also lower your VAR in difficult markets such as today?
Short answer for me is yes, but what I want to highlight is that like in Caylum we teach like the FTSR, right? They're 3 plus the risk. So I just don't consider the sentiment or the overall market outlook I also consider my conviction level on the fundamentals primarily. So as Leonard said a while ago, it becomes a stock picking game, and your conviction fundamentally would also have an impact on your size. So it would still depend. So if I think a few stocks are very cheap, despite this market correction, then I might still
Have
put
the same
in
level.
same base level in terms of my allocation.
Can I go back to the blue dot? So for me, if you're new, there's the danger always. So it depends on your experience. If you just started trading, there's a danger of seeing so many non-blue dots as blue. So that's why I suggest you have to lower your bar. But I think once you have enough experience, maybe you have shown that you know your technicals and fundamentals well, then when the stars still align, you still have to put the full bar. That's how I think. So for example, can I give an example?
Sure.
In Japan today, you can look at the chart. It's JP:3655. It's called Brain Pad, and it's in the AI consulting. But basically, what I want to stress, if you look at the chart, you can see the technicals really showing strength in a bad market. It went up 50% in a week. There's volume, and if I think fundamentally it's really good, once the consolidation comes in, I'll still put the 1% bar despite the market being weak.
Let me just add. So I guess at the end of the day, it's all about putting in all the stacks and understanding everything is a probability game. So you just have to consider
So you
all
mean
of
probability stacks?
Probability
So
stacks, yes.
This is a reason for me to be bullish, +1.
Yes.
And then another
Yes.
reason.
Let's say market outlook. For me, at least, I'm not bullish, but I'm not really that bearish. So let's say that's a -1. Let's say I like the fundamentals. Maybe that's a +2. I don't know. So it could theoretically overcome your hesitation on the macro side if you really like that company fundamentally or technically even, right? So you just have to add these variables to give you the best probability that you can.
I think it helps to have a checklist in this market also when times are so tough. You get to, para lahat pwede na eh. So have a checklist on, is there a setup? What do you think of is there a catalyst? Is sentiment on that sector good? So parang checklist, maybe that could help you also make sure you're not biased or...
Meaning for
or
each
trading. For
segment,
each-
whether it's fundamentals or technicals or
Yeah.
sentiment or risk management.
Per trade.
Per trade.
Yeah.
Okay. Going back to everything else that we mentioned a while ago, you guys both mentioned that it's a wait and see type of environment. What are you looking for?
There are only like 2 cases when I would be very aggressive. And if the number one would be a big fundamental catalyst, well, obviously, right? I mean, and let's say second quarter earnings become super strong, like beat expectations, or let's say
Corporate earnings in general, malakas.
earnings, probably earnings. No?
And there's a lot of good catalysts supporting it, like low inflation,
Yeah,
the budget
yeah,
was passed,
Yeah.
election spending.
Exactly. And but aside from like fundamental catalyst, a big fundamental catalyst, I think another way to be aggressive if you see extreme sentiment, no. So in this case, negative sentiment. So usually we call that capitulation, right? I mean, if it happens, then that's great for us, right? For us traders. But of course, there's no guarantee that it would happen anytime soon. Markets could just stay sideways for a long time. So, but if it does happen, then that could also be an opportunity for us to get in. So either fundamentals or extreme sentiment. That's what I'm waiting for to be aggressive in my allocation.
And just to add on your fundamentals, I assume rolling over of earnings, let's say another 2020, probably be more positive than 2019.
Yes, but again, it still has to translate to a high growth number.
Okay.
Right?
Fair.
If let's say we're rolling over, but the expectation is another 8% growth or 9% growth, and I don't think it warrants.
Grabe ka naman, 8% reklamo ka ba?
Wala. Ako lang yun. I'm conservative.
Okay.
For me, the US, if the trade war really gets like all the headline gets bad, I want to see a capitulation. That's when I'm really excited to buy it. That, let's say, another 10%, 15% crash like late last year. On the other hand, my bull case would be if things really end up good, which is very unlikely at this point. Who knows? Maybe the market sentiment will just drive the strong trend in the US higher for at least the short term. So overall, without those two resolving itself, whether bad or good, I'm more neutral at this point.
So just to wrap everything that we just talked about this afternoon, I assume both of you are generally neutral when it comes to the market. I mean, the bullish has their cases, the bearish has their cases also. And in the meantime, what's happening today is just, it's hard to put in one direction as to which way the market is going to go.
Which is often the case.
Yeah, exactly. But during these times, but during these times also, there's that small pockets of opportunity.
Yes.
Which is where you guys are also focused on.
Yeah.
And those are the types of issues, and you have to understand how you are as a trader to find out which type of opportunity you want to take advantage of.
Yes.
For me, I just want to say that I think it's very important for us traders to have an open mind today in this situation, no? Because at least based from my experience, the biggest losses that I had, whether actual losses or opportunity losses, was when I was sure that markets are gonna go up or down, right? When you're not sure, you tend to always be on the lookout every single day, always question whether you're right or wrong. Maybe you're underinvested, maybe you're overinvested, and that's very healthy for me. But when it comes to a point wherein you're already sure that it's gonna go down, and then you're just, everything that you see is just confirmation bias, or you're sure that it's gonna go up, then based on my experience, that's where I really lose a lot. Always like banking on it's gonna go further down, and then it recovers, and then I'm wala na, iwan na, diba? And vice versa. So I think that would be my advice to the traders today. Whatever your views are, just keep an open mind. Maybe there's a 10% chance that you're wrong, and
Something you might have missed.
yeah.
So, like to add on what Charles said is that even if you have such a strong view of the market, if you're trying to time it, you need to be able to read what the market is doing today. So, for example, even you have a strong view that the market should recover and that things are gonna go well, you have to train your ability to read the market and tell you that things are starting to turn. Meaning that's a skill that you have to develop over time. Not just saying, whatever the market is doing, I don't care, I'm just gonna buy it today. Those are the one Charles said is very dangerous. Meaning, over time, through experience, you learn to develop ways to tell you that the market is now starting to turn favorably better. You need to love these kinds of tough markets. For me, the most lessons I've learned were during these tough markets where I'm able to improve my understanding of what stocks could go up versus those that don't go up. In good markets kasi, you really think you're so good. In bad markets, that's when I really learned my lessons, that there's still so much I need to learn pa.
Yeah, and I'll probably just add one last comment before we end this podcast. And I agree 100% with what both of you said about open-mindedness and having that discipline and learning to go through these tough times, right? And I always give this advice to all our traders and to all our students. And it's not about having that longevity to survive during these tough times. And you want to have that process of going through these difficult markets, learn as much as you can, survive, so that when you see it again, it becomes so much easier to execute, right? And it might take time for you to learn this, especially in today's type of difficult environment. But these are experiences that make us better, right? So as traders, you have to understand that everything that happens, whether good or bad, are pockets for us to find ways to become better over time. Okay? So there you have it. It's good to be back, and hopefully you'll hear from us again soon enough. Thanks. Have a great day.